Hi everyone, today is Friday, May 7th, 2010, and the market's closed for the week now. Let's take a look at the damage because it was quite a damaging week, as we obviously know. We had started out the week a little bit cautious because of the big volume days that we had seen recently on these down days, that we'd seen big volume coming down towards that 108.5. And what looked like big volume obviously got swamped here the last 2 days, and now those bars really don't look so big anymore. But we were going to take up a more defensive posture below 108.50, and the theme there was that gold was looking good as well, and gold had a really nice week. We'll talk about that more in a minute. But the S&P 500 for the week lost 6.3%. There was worse damage. We'll talk about that as well. But the S&P 500 broke that 108.50, 118.50 rather, as I had suggested on Tuesday. A lot of people were talking. I'd seen Twitter comments about how that 50-day moving average is support. I had warned that it's not support. It's just an area to look for the potential for support, and we were going to look, for higher highs and higher lows, and we were going to look for it to get back above the declining 5-day moving average. Well, obviously the bottom fell out Thursday afternoon, and we had that severe sell-off, unprecedented sell-off, and the market rallied up very quickly to the daily VWAP on Thursday afternoon. But today we had seen an attempt at we're starting to stabilize and try and bring this market back into a more stable condition. I think the patient suffered a massive heart attack, and now it's in the ICU unit still recovering, and maybe going to get downgraded on Monday to a less severe condition. But what we saw is that the 2-day volume weighted average price did act as resistance today, and the market kind of stayed around that pivot. I didn't even trade today. I figured it was just a day to get myself into trouble. So I don't know what would have happened, but I seem to be getting better over the years at sitting out certain days and just saying, you know what, it's just not for me. 2,200 declining stocks and 891 advancers today. So we still are seeing that the advanced decline line is getting skewed to the downside. On the daily time frame, we can see here that the market tried to stabilize. We'll see how well it does at that 200-day moving average. And if at the beginning of the week someone had mentioned they thought the market was going to the 200-day moving average, I think most people would have thought that that person was pretty crazy. It's also interesting to see that we finished right on the two-thirds retracement level of the lows from this year to the highs that we had just seen 3 weeks ago. So we had seen almost a perfect 61.8% retracement on a closing basis after obviously severely overshooting that level on Thursday. So what we're going to see, I think we're going to see maybe a little bit more stabilization. What would be nice to see actually is kind of the bottom drop out, maybe big gap lower, drop down, and then come back up and make a run for that 5-day moving average. But it's still guilty till proven innocent. For most people, the best bet is to remain on the sidelines in this environment, and I'm going to talk more about it more in depth this weekend, but I'll get another video out to you. But let's take a look at the Qs. The Nasdaq the Nasdaq similarly broke an important level of support early on in the week. We're looking at that 48.90 to $49 level, and then we were looking for the potential of a move maybe down to the 50-day moving average, and we're also looking just to back it up to the S&P 500 as well. That the possibility that this would be support from the January highs. And once again, it just proves that we don't know what support is. A lot of people were saying this is support. Well, it wasn't support. We only know in hindsight it's potential support. And if the market stabilizes there, we want to be aware of it. We want to be of megaphone patterns and head and shoulders and that sort of thing. But until prices break, it didn't make sense to get bearish. It made sense, as I've been saying, to become cautious. But this market came and dropped down, stabilized near that 50-day moving average. It seemed like for a day, sucked in the people. A lot of people there who I think just spit it out the next day after that 50-day moving average failed on a two-thirds retracement level of the Nasdaq. We had seen that this market came right down to its 61.8% retracement as well. We'll be looking for more stabilization in near these 200-day moving averages and let this market set up and identify to us what the path of least resistance will be next. We're still really just kind of reeling from this large sell-off. So the Russell 2000 if we took a look relatively at the two-thirds retracement, you can see we did get down to the two-thirds retracement of the year, but closed just around the 50%, or well, I guess you would call that 55% maybe, but still well above the rising 200-day moving average. And this market did get down, and so far seems to maybe have found some support, or trying to find support rather, because you can't say this market has found support yet. There's just no evidence of that. But when we broke the support at 71 bucks a share was the level we were really looking at. That's where the cascade began. That's where you don't jump in front of it, no matter how much it seems like it's down too much and that sort of thing. But lower highs and lower lows, even on this 10-minute time frame. Well, besides if you take this out right here. You can't take it out, obviously, if you were trading in there, but still a very sick market in need of some recovery, stabilization before it can move higher. And the good news is the stronger stocks are going to start to reveal themselves, and the weaker stocks will start to begin to bounce on lighter volume, and there'll be good short opportunities as well as long opportunities, I believe. The semiconductors, obviously, we knew we had been watching that 28.80 to 29 level, and we're concerned as it kept coming down to that level. And I'd said, breaking below that, all bets are off in the semiconductors, and they did break down. This was a failed move on the daily chart. Obviously, it failed. It was a failed breakout. Breakouts are great to see, and everyone wants to get bullish. But if that breakout fails, from failed moves come fast moves, right down to the 200-day moving average. We still need more stabilization in there as well. The financials are right down on their 50-day moving average. I'm sorry, 200-day moving average. That's the black one that I'm showing. And as far as Fibonacci goes in here, from the year low to the year high, we are holding above that 200-day moving average right now, and the 61.8% retracement as well. So I think stabilization down near 1480 to basically in the 1480 area. That's where we want to see this market begin to stabilize. Then perhaps we could think about getting long, but you really can't look at this and expect to make more than just quick scalp trades to the long side when we're below a declining 5-day moving average like we are now, and that 5-day moving average is declining at a pretty rapid clip rather. The USO year to date is down 12.1%. So this market is another one that was looking bullish, looking like it was ready to break out on the weekly chart. It didn't break out. It made a slightly lower high. I didn't think it was particularly bearish, but when we broke these levels here, just really got slammed hard this week, and down 12.1%. You can make the argument that this that oil should be going higher based on this well that continues to spew oil into the Gulf, but only price pays here. So forget the headlines and trade what you see. This market is just really fragile. All these markets is what I mean when I say this market. The IYR didn't get hit as hard, really. If you look at it, it's holding some support near this 49.5. Obviously, we had the same type of effect intraday on Thursday, but on the daily time frame, we closed below the 50-day moving average, and we're well above the 200-day moving average, and we've got the Fibonacci as well that is showing us that it really only retraced at least on a closing basis, 38.2%. Now, what you could look at this and say is, well, if we do get a bounce here, perhaps it's going to create a right shoulder. Let's not look into that too deeply yet, but just something to kind of plant in the back of your brain, to think that maybe that could be the basis of failure in the IYR. But this week they held up much better than the rest of the stocks. They were only down 6.08%. So, actually, let me rephrase that, because I'll just pull the table over. We didn't see them hold up a whole lot better. And why does my Excel well, here we can see it there. It resizes this. So let's see. We had the IYR was actually down 6.8% for the week. Oil was down the worst. Of the bigger groups, Russell was down 8%, NASDAQ down 7.8%, and only gold and the dollar were up. And that confuses a lot of people, but trade what you see, not what these theoretical relationships that are supposed to be there. Gold in a great uptrend. I had said in that article at the beginning of the week that gold looked like a good buy with a stop down near 112.30. It's well above that. I think that if you're long gold, you probably use this week's low near about 113 as a stop, and it still looks like it's headed maybe towards that 123 level that this inverted head and shoulders pattern indicates. So gold continues to be bullish. The U.S. dollar continues to be bullish. It was down a little bit today. The retail stocks, they were hit pretty hard as well. Obviously, what were they on a percentage basis? Not down as bad. They were only down 4.8%, but still, any other week down 4.8% wouldn't be only 4.8%, because that's obviously a very big hit here. So. We've got the two-thirds retracement that was kind of touched intraday. We're above the rising 50-day moving average, but just a lot of damage out there. So I'll be posting this to YouTube and subscribers. I'm going to have a much more in-depth video for you guys at some point on Saturday once I've really sat down and studied this and kind of got my thoughts together better. So hope everyone has a great weekend, and hope you got out of this week alive.